Silver's historic opportunity, and the 100-to-1 activation point. In this week's Investment Insights video, silver's biggest breakouts often start here. Each time a 100-to-1 gold to silver ratio prints in the last 25 years, silver outperforms gold by up to 5 times. Institutional stealth accumulation is underway. Recent ETF outflows mask the real stories. Major players are locking in physical silver at alarming speed. A tiny market with massive potential. The entire silver mining sector is just $27 billion. Even small inflows could send prices soaring. Let's get into it. Few investors know about the silver trade of 1980, perhaps the most brilliant wealth transfer in precious metals history. When silver hit its peak of $50 an ounce in 1980, the gold-silver ratio plummeted to a historic low of just 17-to-1. That means it took 17 ounces of silver to buy a single ounce of gold. To few investors who traded silver for gold at that ratio, watched their holdings multiply when the ratio snapped back. Today, we stand at the opposite extreme, a level that has only appeared twice in the past 25 years. Each time it signaled silver's explosive outperformance was imminent. Data we're about to share shows silver is nearing another turning point, one that could match today's best opportunities. The most reliable signal in silver's history has just appeared again. The 100-to-1 activation point just triggered. In precious metals markets, an activation point occurs when a specific technical level is reached, like history repeating itself with surprising accuracy. Gold to silver ratio just hit 100-to-1. That means an ounce of gold buys 100 ounces of silver. Again, this extreme imbalance has only appeared twice in the past 25 years. What followed each time was that silver outperformed gold by 3 to 5 times during the subsequent precious metals rallies. In 2010, when this ratio last peaked near 70-to-1, silver jumped from $15 to $48 in just 14 months. That's a 223% surge, while gold gained 45%. After the 2020 spike to 124-to-1, silver doubled while gold gained just 31%. Silver is both a monetary metal like gold and an industrial metal critical to solar panels, EVs, and electronics. Big investors keep buying gold but still overlook silver. That gap sets silver up for larger gains as the metal rally builds. Silver stealth bull market. Smart money moves first. The next chart will expose a critical pattern most investors are completely missing in the silver market. When silver prices, the gray line, climbed from $20 to $30 over the past year, ETF fund flows tell the real story. Look at late 2023 through early 24. As silver began its upward move, we saw massive green spikes of money flowing into silver ETFs, with over $700 million of net fund flow in the second half of 2024. But here's what's fascinating. Despite silver recently hitting new multi-year highs around $30, the latest fund flows show persistent outflows, the red bars. This isn't bearish, it's wildly bullish. The smart money is bypassing paper ETFs and securing physical silver directly. The identical pattern emerged in gold months ago before its explosive move above $3,000. First came ETF buying, then physical accumulation as sophisticated investors recognized the supply shortage. Silver stockpiles are thin and the ratio sits at 100-to-1. History shows these conditions often come right before silver's biggest jumps. The public hasn't even started buying silver yet. That's still coming. Central banks and silver holding. So do central banks hold silver like they do gold? In short, no. It's neither stable nor valuable enough to hold in reserve. Silver also takes up far more vault space per dollar than gold, so it's an inefficient reserve metal. But remember, that's advantageous for silver because its market cap is tiny compared to gold, other industries, or even large companies. So any marginal increase in silver buying or selling tends to send prices into a complete frenzy. Scale is key for massive gains, and here's why. The silver market's hidden microverse. The single chart reveals something so profound it should make every investor stop and think. The entire silver mining industry, the companies that produce one of history's most important monetary industrial metals, is worth just $73 billion. Let me show you how small the silver market is. In 2023, over $6 billion worth of silver produced went to investments in physical products or ETFs. That figure for gold was $62.7 billion. The following chart compares the silver market to other major asset classes and large companies. As you can see, the entire silver market is a blip relative to these other sectors. That's why when gold pops, silver tends to rise far, far more. Let this sink in. The global silver mining sector is 1/12 the size of the oil and gas industry, 1/4 of the size of Tesla alone, 1/10 the size of Nvidia, 1/5 the size of Bitcoin and other cryptocurrencies. Even the gold mining industry, itself tremendously undervalued, dwarfs silver miners by almost 5x. This microscopic market cap means even modest capital inflows create explosive price movements. If just 1% of the money in oil and gas shifted to silver miners, it would triple the entire silver sector's value overnight. When silver begins its historic outperformance of gold at the 100-to-1 ratio, these miners typically can deliver 5 to 7x the gains of the metal itself. The smallest boat rises fastest in a rising tide, and silver miners represent the smallest vessel in the financial ocean, perfectly positioned for the incoming wave. History suggests we're at the beginning of a significant move, not the end. So here's what Mayor Katusa is doing personally. 1. Building watch lists of select silver miners with proven reserves and low production costs. 2. Maintaining some dry powder for additional opportunities as the silver cycle accelerates. 3. Focusing on companies with leverage to silver prices, but strong enough balance sheets to weather volatility. Remember that timing the exact bottom is impossible, but positioning before the broader market recognizes this opportunity is essential. Make sure you like the video, subscribe, and stay tuned for the next one.
Subscribe to the KRO, which is a Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.